GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So the idea is to cover some of the major asset classes from Forex through commodities through to cryptocurrencies and indices. If there are some extra markets you'd like us to cover, please drop a comment in the video. Otherwise I will carry on with these major assets which tend to be some of the most popular to trade. If you are getting some benefit from the video, please click the like button, it really does help. Okay, so let's get on with it. Let's have a look at the euro to start with. We'll work our way through the Forex and the charts as you see them on the screen here. So here's our daily chart, and so as you can see we were in an uptrend, but more recently we've been consolidating. It's been a pullback within an uptrend. So of course the question always with a pullback is it the beginning of a reversal into a bear market, or is it simply a drift lower before the uptrend continues? There's no cast iron way of knowing that, but what we do know is that the attempts to kind of break higher so far have been failing, and obviously last week was a very bearish week, fell every day last week. Drop back through the 50-day moving average, which is a very simple way to judge where the momentum is in the medium term, and so we can say that the momentum is to the downside in the medium term. It's below the 50-day moving average, and obviously we can see 5 consecutive days of falling prices, and we can see that we just haven't been able to accelerate any momentum to the top side. Just look at this RSI, it's just being capped out every time around, what's that, 60? 55 in fact. So you can see there isn't a lot of upside momentum, and it looks pretty bearish at the moment. I've drawn these channel lines in, they're not perfect, discounting this kind of spike high here, drawn this through here, and that actually comes pretty nicely parallel with this first low connecting this low here. So potentially what we're in for is just another slight drop. That would take us down to about 115.40 depending on how quickly we get there, maybe 115.30, and then potentially we could rebound within the channel. Obviously a lot of this is the dollar and how things pan out with the US election. We'll obviously know what happens there by early Wednesday. So if we drop down to our shorter time frame chart, here's where we can kind of see what's been going on. This last week we said the price action was looking decent. What we'd seen is there'd been a pullback, and we raced out, took out that high, raced out, took out that high, pulled back to the old high, which is what you want to see. We rebounded, but we weren't able to get back to the previous high. Things started looking a bit weaker here. Another attempted rebound, you can see here, only made about 50% of that move, and then once we got to this bearish candlestick here, which took us through this previous support, we knew things were turning sour at about this point, and then it ended up, as we could see on that daily chart, where it was just bearish every day. It was a very sharp downtrend there afterwards, and we took out this low here with a lot of ease, bounced back, held it as this was support, held it as resistance, and now we're back down towards these old lows, where again we're attempting a rebound, but it's early stages yet. The price action is still pretty bearish. So there are opportunities. I mean, we're at this previous low, so it's certainly a bit early to tell just from this one candlestick. I certainly wouldn't be surprised to see us take out this candlestick's long bottom, the long leg, the long wick of this candlestick. But if we can build some upside momentum from here after that long wick, we can start to stabilize into a bottom. But point being that the trend on the short term is down, and on the medium term as well, based on this daily chart, also down. So I think we're more looking for bounces to sell into, and such an occasion might be if we again get back up to this resistance that we'd highlighted, where it was support, bounced into that resistance. We get back up there again, might be another opportunity to sell back down into this level, and maybe at that point we establish a bottom. Let's move on to the British pound. This is the daily chart here. Again, there's a similar story from last week where we were making new highs, but this Fibonacci I'd drawn in last week, and I did say we'd perfectly bounced into 61.8 Fibonacci and been pulling back from there, and that was a concern. But I also said that you can still remain a bit constructive on it while we're above. I don't think the trend line was drawn there necessarily. It was drawn a bit more kind of like this. And now we are down and testing that trend line and pretty much through it, just not quite on a closing basis. But this kind of gramophone wedge pattern seems to be breaking down, and if that's the case, it's bearish. You'd imagine a retest of 127, this previous low, and below there's not too much support. We could come down and start testing 122-ish again in fairly short order. So if we drop down to the 4-hour chart, you can see this trend line in a bit more detail. You can see how we took it out, and you can see how there was a lot of strong momentum there, and where you would expect the bounce to happen, it did, but it just didn't go anywhere. And you can see the 50% Fibonacci level worked on the shorter time frame. We dropped down, tested the rising trend line, and eventually broke through it. And now we're attempting to stabilize because we are through an area of support here with 1, 2, 3, 4-ish previous lows in this area. So you can see where the bounce has happened, but it does look like both in the euro and in the pound we've made a decisive bearish shift. If you draw this through the first dots here and look at these as spikes, and this one works, and you can see it does look like we're turning lower here. So let's move on to the dollar yen. Same old trend line we've had on for a while, and we mentioned last week we were turning pretty bearish on this, and we've come down and we've tested 104, so really much of the same thing again. There's not too much to add to this. 104 is the support, the declining trend line at the top is the major resistance. We're just kind of caught in between, and whichever one we're closest to, that tends to be where the best opportunity is. We have taken out this previous high here. So we're attempting a bottom. You can see high taken out, high low, high taken out, but in the broader context of things, it looks pretty soft, and we're kind of coming into now this area of resistance through here, and that's where this high attempted to break, came down, touched it, and seemed to be turning down again. So this potentially an opportunity to the downside in dollar yen. It's basically what you associate it with a risk on mode, like buying euro dollar, buying pound dollar, buying dollar yen. They're not working. It's the trend is towards risk off at the moment. And let's move over to the Aussie, still at that critical 0.70 level. So we're in for essentially our third test, but 3 candles at that level over the past few days. Doesn't seem to be much of a bounce this time around, and what we can say is that of the last 2 bounces, it hasn't gone as far each time. So tested it once here, we got as far as 0.72, and then dropped down again. Then we've got to 0.17150. We've dropped again. Maybe we get up to test the declining trend line again, or maybe not, and we just fall through it because sellers driving prices lower, buyers just about holding on to the same consistent level here. So it looks like, depending on how things pans out, again the big risk event this week is obviously the US election and how that pans out with the dollar. There are different theories, some of which we've discussed in our daily reports about which way Biden and Trump would swing the dollar. But I think probably the most basic conclusion is that what markets are expecting is a Biden win, and because that would pave the way to some extra stimulus, and if we do get that extra stimulus from a Biden win, especially a democratic sweep, then that should be bearish for the dollar, because it just means a lot of extra debt being taken out on the US side. Okay, let's move over to gold, and looking kind of similar in a way to the Aussie. It's been in this triangle pattern for a while now, and obviously had some bearish price action last week. We got a little more positive on Friday, bounce continuing a little bit today. It's not really acting as a haven. If you're confused about why it's looking weak, it's acting as a counter to the dollar, the same as these other currencies are, and so it's not hit as weaker levels, but it's been consolidating for a longer period. And obviously the big question is, do we take out this this level here? I'm not sure we can really see any particularly meaningful moves until election night, and we start seeing some of those exit polls and really understand what's going on with the US election, and then markets, investors and traders and markets will, as a function, will start moving in reaction. But it's pretty easy to see what's going on here. We're in the triangle, the declining trend line capping the highs, and the horizontal level capping the lows. Much the same is happening in the Aussie and some of these currency pairs. Again, similar to the Aussie, attempting a rebound off the lows, but overall you would say, particularly after these moves last week, that the action's still bearish, and we're still under those moving averages. Move on to oil. This is the biggest mover today. We've had a gap lower today, and it's dropped us down into 5-month lows. So we've been talking about this for a while, how it's in its trading range, but it increasingly looked like, because it couldn't even get to the top of the range that was capped out here, that a break to the downside of this range that had been in place was more likely. That's what we've got. Now it's obviously run into the next level of support from these lows back here, and we're attempting a bit of a rebound here, so we're off the lows of today, almost flat on the day now. But just looking at the price action in the lead up to this, it was quite classic if you knew what you're looking for, because okay, so the price was holding on to the support. We got a decent, let's turn off that. We had a decent rally to the top side, started taking out, okay, so I need to turn those settings off on MT4 so it starts clicking forward. You can see at this point we had a decent rally off the lows. This was looking quite bullish, naturally pulled back from the resistance, rallied up, again bullish, pulled back. This was looking a bit soft, but we did just about hold on to the prior levels of support here, and we did on multiple occasions. And this during this period, we couldn't get through the highs, but we couldn't get through the lows either, and actually we're printing some higher lows, and it was neutral. It could have broken either way. But what you can see has happened is that we ran into the resistance for a third time, couldn't get through the resistance, and finally what happened here is we bounced from this support, but it was kind of a rising support from this trend line, and we rolled over midway. And here at this point is when things started to look shaky. And even if you had a horizontal level in through here, you can pretty much reach the same kind of analysis, where okay, here maybe if you had the rising trend line through, you're aware of it a bit earlier, but still here things looking shaky. We were in this neutral range, but it broke to the downside. Then we got our opportunity where it bounced up. People tried to buy it down here, but ultimately it failed at this old low here. What was the support turned into the resistance, and then we just tanked to the downside. And so you could see through, starting with the higher time frame, the rejection of the resistance 3 times, and then finally the support giving way, then the rebound back up to the support testing it as resistance, and then the drop lower. And we've as we just saw on our daily time frame there, hold on, it's because I've turned these off, we've come straight back into an old layer of support. So kind of textbook stuff here, obviously benefit of hindsight stuff too, but interesting the way these things pan out. There is a kind of structure to the market that if you're watching and how it reacts to different price levels, you kind of get a feeling as to what's going on. The flow of the market, how people refer to it. Okay, let's move on to Bitcoin. This has been very interesting. If you remember last week, we kind of topped out here. I was looking for a pullback into this area because it was the old high, and also coincided with a Fibonacci pullback. If we'd drawn Fibonacci through this zone here, then that would have been a confluence of support. What I said was the market's looking strong. What we'd ideally like to see is a pullback into this area. In actual fact, we never got it. The market was so strong, printed a small low there, rallied up to the high, and printed an even higher high, tested the high again, and eventually broke out and tested the level that we had on the chart last week, which is this peak at 13,800. And so that's where it's found its resistance. And no coincidence, right? These support and resistance levels we work time and time again. 13,800. We finally tested it. We've pulled back from there. But even from there, we had a bearish action, 2 bullish days, and now we're getting another attempt at a bearish day. So let's see if we end up holding 13,800. Maybe we still get a drop back to my area, but it doesn't quite make as much sense now in terms of the kind of Fibonacci confluence. But say if this were a top, then the area I'd highlighted was a 61.8% pullback. For argument's sake, that could still pan out. 12,200 and 61.8. I think before maybe it was 50. So that could be our opportunity to jump on this Bitcoin move. But for the time being, it looks very strong, and there's not necessarily any indication that it's actually looking for a pullback. You can see here that we basically put in, you can't really draw an MT4, but this is like a rounding bottom after a big move up. So this is generally, with the bottoms kind of curve up higher, this is generally a kind of bullish formation, and you expect to break higher afterwards. Okay, last but not least, the S&P 500, and this is the daily chart, and here's a big question. Have we put in a double top? It looks similar on the S&P and on the Dow and on the Nasdaq. They all rallied up. They all had a big drop in September. We rallied up in October, but none of them took out the old highs, and have basically made a swing failure and come right back. Last week we were talking about the potential kind of inverse head and shoulders pattern, where this was the neckline, and a rally off here would have been good news, but obviously we didn't break it. And again, in terms of picking your spot for knowing when the trend has changed, well, it looks a bit ugly, there we go. This was really it, this line through here. At this point, when you saw this very bearish action, thought, oh boy, we haven't, struggling here, going horizontal, but still it could have, basically, say if we go back in time, got our pullback, okay, so it's not super bullish action off the support, but still it's horizontal, and you could have equally had a bullish break above the moving average, above the highs, but in fact what we got was a very strong bearish break. Obviously you don't really want to sell at the lows, and so we got the bounce. And again, it kind of, if you're looking at the specific short-term handle rather than the kind of long-term basis from which we'd drawn this line, if you got a bit more detailed on your entry point in terms of the immediate low, that's where we bounced back up to, and then we tanked again, and obviously found our way back to support, which we've had drawn in for a number of weeks. This peak, consolidation area, support, and support again. So in amongst the chaos, there is some textbook technical analysis to be had. So we're rebounding off the support here, but again, all of this, you can see S&P 500, currencies, gold, a lot of this is risky assets coming down and testing their lows of the past few months. And if we get an uncertain election result, particularly a tied result where we don't know who the president is immediately Wednesday morning, as we kind of should, especially because of all the mail-in ballots, etc. If it's tied, or if it's just so close, maybe for example, Biden clinches it, but Trump doesn't accept the result because there's still mail-in ballots to come, or vice versa. Then we're going to have a contested result, and that results in uncertainty, and that's when we could see a break to the downside. That's the most clear-cut result. Just a sweeping Biden win, I think, would probably be a relief. A Trump win, you know, that potentially could also see us break down, because it's just not really what people are pricing in or expecting right now. But anyway, let's see. By the time we have next week's webinar, we'll know what happened in this election, and likely we'll be talking about a break of these major support levels, or the fact that they held and the risk rally is continuing. Right, thank you very much for watching, everyone. Good luck trading this week. Should be very interesting, and see you at the same time next week. And of course, if you do enjoy these videos, make sure to click subscribe so you don't miss the next one. Thanks, everyone.